Good Tuesday afternoon, everybody. Welcome to Market Minds today. Hey, Brad, thank you so much for being here. How's everybody doing today? Hey, Steve, as we talked about yesterday, very just volume is so light right now. We talked about this yesterday that, ahead of NVIDIA earnings tomorrow, and then we've got PCE later in the week. Um, Things are just really quiet right now. Maybe retail institution just kind of positioning themselves. The weather is perfect. Maybe where you are, Thomas. I'm in Colorado right now, and we are getting some much needed rain to hopefully put out these forest fires that are right by our house. So definitely some much needed rain. But yes, smash away all that good stuff here. And today we are going to talk about the futures market because activity in the futures market is robust, tight markets, liquid. Options in the futures markets are also expanding. We're going to talk about that a little bit. And there's nobody that I can think of to bring in to talk about this who is more learned and as good of a teacher in the futures markets as my buddy Dan O'Brien, Mr. Karnak.
Hello, Scott.
How are you doing, Dan?
Good. Just plugging along here with the low volume that you mentioned.
Oh man, I was just putting together a report. I do a report for the CME at the end of the day every day on the equity option side of things. Yesterday on the option side, the volume was half of normal in the ES. I mean, it was terrible, and today looks like it's pretty much the same.
Yeah, it's trending just about. I just looked at it, maybe 6 to 7% better than yesterday. So not by much.
Yeah.
I keep track of volume, and I have for years on a daily basis because I do some other analysis on a spreadsheet. So I have it going back into the 2017 or something like that. So it's a very long spreadsheet. At any rate, yesterday or the S&P, going back to how you mentioned the options volume was very low. Well, the overall trading was extremely low, and it was only in the 800,000s. So 1.1 to 1.2 million is on the low end, and anything under a million is just like, what is happening? And it didn't even make 900,000.
Yes, and for those that if you care to get a daily report from the CME on volumes and everything, you can get that. I'll post a link up here later on. All you have to do is subscribe right to the CME. You don't need to have a CME account. You don't need to be a member. You don't need to, pay for anything, and you'll get daily updates on if you care to get them. I get them. I know, Dan follows them 24/7, but we can't get lulled to sleep because, like I said, we've got NVIDIA and then PCE, and then we do have a long weekend. We do have a holiday weekend with Labor Day next Monday, but then, I think it's off to the races from there.
Yeah, I agree with you.
Yeah, it definitely is one of the largest markets in the world, Kevin. And we're going to talk about some of the top futures to trade, both the outright futures and options. And I know that, Dan's been doing this almost as long as I've been doing it, but completely on the future side of things. And, when Dan says something is going on, you have got to listen. And, Dan trades pretty much across anything in the futures market, but the top ones really that, we're looking at are the ES and the NQ, ESB and the E-minis, S&Ps, NQ being the E-mini NASDAQ. But, I have some stats up here on the board about why people trade futures and what some of the benefits are. Dan, you want to go through those?
Sure. I think you picked 4 of the really good ones here. So you can absolutely trade more with less. So just think about this for a second for anyone who's only traded equities. If you're going to buy You want to buy 1,000 shares, for example, of Netflix. What's that going to run you today?
Let's see. It's as we speak, it's $1,225.
Right. So it's a lot of money. Add 3 zeros to the end of it for a
Right.
thousand shares, and you're talking 1.2 million. So just using that as an example, a well-known ticker symbol, and just that it could really get very expensive because in order for you to, like, let's say that the trader wanted some leverage. Well, that's why I chose 1,000 shares. And I'm sorry, futures aren't traded in shares, but along the same lines, we call them lots or position sizes, if you like. And the leverage is inside each one of those lots, and that's the leverage is of course determined by the exchange, and it does allow us to control a lot more leverage with less money than the example from Netflix. So it gives you more uh, bang for the buck, to be sure. Trading around the clock, there's been multiple times where I've been up till 3, 4 in the morning, trading only on special occasions, but things where the market could go crazy. And that would be Brexit. The first time Trump was elected, the market was limit down overnight, and then it turned around and went up like crazy. Uh, so there's times where it could be amazing overnight, and then of course, if someone just you are a large equity trader, you might need the overnights for just from a hedging perspective.
Yeah, no doubt. I mean, there's such, the correlation there, even if you're in, just like Dan said, the equity markets, if you need to get a hedge on or do something, whatever, there is such a direct correlation depending on, which futures you're looking at, that, yeah, that excess is there. What is it, 23/7? Or
Yeah,
20?
exactly. So it's almost 24/7, and then even on Sundays, the market will open for the Monday session at 6 o'clock Eastern. So you get all
Yeah.
Sunday evening as well. The tax treatment is great, of course, and then there's fewer trading restrictions. Like, you can short anytime you like. There's not a you don't need to ask your broker to find stocks that are shortable and in the size that you want. You can do that anytime you want. And then, of course, there's no pattern day trading rule. So there's a lot of advantages.
So with that, these are some of the things that we just went through. Around the clock access, the liquidity, which is something I talked about at the beginning here. The liquidity is so deep. It really is. We talk about bid ask spreads all the time, especially when we're trading equity options, and we want to look for some of those stocks that have tighter spreads. Well, in the future markets, you are typically getting really tight spreads, even after hours, right, Dan? I mean,
Yes.
at least in the ES and the NQ. And
I would say like the S&P, for example, the ES, there's a one tick spread. I would say 98% of the time. Even when the market is moving quickly, there's usually that one tick spread. Now, of course, there without a doubt, there's um, some times where it won't be like that. For example, if the Federal Reserve cuts interest rates and it's a surprise, then there's going to be a spread in the bid
in a
ask.
big gap.
Exactly, for sure. But most of the time, it is, as you mentioned, it's so liquid that it's one tick, and I haven't been slipped more than one tick in quite a while. There can be some slippage, but it's rare. It really is. In the ES, it's a little more prevalent in the Nasdaq, but yeah, it's usually not a problem.
So great question here, Kevin. I'll answer yours first, and then I'll let Dan answer the next question. But explain the spread. The spread we're talking about, the bid offer. So let's
Well, if
see
you're on
here.
the floor, like when you were on the floor, the market maker is saying, here's where I want to sell it, and here's where I'm willing to bid it. So that's the market maker taking the other side of your trade. Who was it? Kevin, did you say? So
Kevin was asking about explaining the spread.
so if the spread is, if it's I'm looking at the S&P right now, it's trading at 61. So let's say it's even bid at a quarter. It was even bid at a quarter. And if you want to buy it, you're going to pay up to the market maker at a quarter. So if you're looking at the spread and you have a market order, now it's quarter bid, now even bid at a quarter. And if you sell it, you're getting the lower price. So if you see the last trade is 64.60 quarter and you sell it at the market and your broker tells you just sold evens, you didn't get, quote, you didn't get
The
screwed or a
offer.
bad fill. That's
Right.
where the market was. That's the legitimate price, because the market maker is not you. You're the retail guy,
Yep.
and you are selling it to the HFT market maker who is doing it electronically. But it still works the same way as when we were on the floor.
Absolutely. And that's what we talk about all the time, guys, is right now we're market takers. When Dan
Yes.
was on the floor, when I was on the floor, market makers, we are now on the retail side, market takers. The next question was, Dan, I'll let you answer this one. What is futures in layman terms?
Well, it's a derivative of the actual market. So, if the S&P 500 has the 500 stocks, and it's a highly leveraged derivative of the same thing. So if you want to use the highly leveraged trades of the entire market, this is where you would go. And if you want to hedge against the entire market, this is where you would go. And for the other reasons that we gave, not just leverage, but the nearly 24-hour a day ability to put on those trades. If something happens in an Asian market or the European market, the futures are open for you to take advantage of that. But it's still following what the overall S&P 500 or the NASDAQ 100 is doing. It's basically the same market with more leverage. But there's reasons to use it, which we've just mentioned.
And when we talk about futures, okay, when you're trading a stock, regardless, Netflix, Nvidia, whatever it is, okay, the stock price is the stock price. So if you're trading options in a stock, okay, whether you're trading this week's options, September, October, next year options, they're all tied to one stock price. The stock price is the same regardless of expiration. With futures, there are futures markets. And so in the ES, they're every quarter, right, Dan?
Yes.
So when you're trading off of a futures market, you could trade the September future, you could trade the December, March, June, et cetera, et cetera. So different time frames, and then options on the different futures will also be different because those prices are different. We talk a lot about VIX futures. Okay, same concept as the E-mini or the NASDAQ, where you've got different expirations and you have a futures curve where typically the pricing, the further you go out in time, is typically going to be more expensive than it is right now. Sometimes it gets inverted, and that is called backwardation, but that's what futures are. Cool. Dan, you want to talk about the E-minis and the micros for a moment?
Sure. Well, as far as the micros go, that is this is a great product. Whether it's you're using micro ES, micro NASDAQ, micro gold, whatever, it gives you an opportunity to trade with very low risk, and it's 10x smaller than the ES and everything. They're all 10 times smaller. So yes, it would take you a little bit longer to make money, but that's not the point of using the micros. Using the micros is a way for you to go from trading on a simulator, which has no risk, and people don't trade that, or sorry, don't treat the simulating trades as, I think, as seriously as they should. I mean, it's already fake. Why make it worse? Right? So
No question.
why cancel your stop just so that your ego doesn't get hurt? If you can't make
Bingo.
money trading in or using a simulator, then you need to use it even longer. But once you're there and you're doing well and you understand what's happening, then you go into the micros and you've got real skin in the game. And nobody's going to walk around handing out $20 bills to people on the street just for fun. And so you got to take your micro trading seriously as well, because the $20 here, and then you get up, you add a trade a little bit more, and now you lost $100 instead of 1,000. Remember, it's 10 times smaller. And then you know you got to take it seriously as well, because that'll start to add up, and you don't want to just start throwing money around because, well, it's just the micros. So it's a really good way to step up into your trading, and you can increase your size trading micros so that you get close to an E-mini contract, and then you can just step into the E-mini. So it's a great product. It's exactly the same as the ES and the NQ and all the other markets, just at a smaller size.
Absolutely. And Gregory, the futures trade around the clock, 23/7. So it's not just pre-post market of the equity markets. They
Right.
trade around the clock. And Bill, sure, there are futures on commodities, agriculture, currencies, gold, silver, oil, treasuries. What I just put up here, and there's a link here. I'll post it into the chat. Hang on. Let me post it in here. This is a link directly to the CME website that shows all the things you could trade. So it is not just those commodities like soybean, cattle,
you could trade
cetera,
weather. Weather.
Yeah, weather. Absolutely. Absolutely. So
butter, there was a butter pit on my left-hand side when I would walk up the stairs. Very small, but there was a butter pit on the floor, which I always thought was kind of weird, but it is what it is.
It is what it is. And in fact, everybody, when we're finished here in 45 minutes, so at 1 o'clock Central, 2 o'clock Eastern, whatever time that is, for those of you that have access on your cable or satellite or whatever it is, to a channel, RFD TV, I will be interviewed there at 1 o'clock Central. We're going to be talking about cattle futures. so we're going to be talking about it. But the things that Dan really focuses on, even though he trades wherever there's opportunity, it's the ES and the NQ. So the ES is the E-mini S&P futures contract. The NQ is the E-mini 100 NASDAQ futures contract. Okay, here are the values. Again, the markets are incredibly, incredibly liquid. And one of the big benefits that we didn't talk about are futures contracts are settled into cash. So unlike on the equity side, when you have an option that expires maybe in the money, okay, and that option doesn't settle into cash, you actually are taking delivery or having to give delivery to someone else of a particular stock. Futures contracts settle into cash. End of story.
Mm-hmm.
Right, Dan? I mean, that's the don't you find that a lot of retail
they get that confused
traders like that?
Yeah, there's of course the running story that somebody always knows somebody that knew somebody. They saw their best friend at Baskin Robbins, and no, that's from Ferris Bueller. But where a distant relative or friend had to take delivery of crude oil or something, and and then they get worried about the S&P, et cetera, and it's just really not an issue. They settle into cash, and it's just an unfounded worry in futures.
And yes, Tom, there are options on futures. Mm-hmm. The 100% there are options on futures. In fact, I'll pull them up. I'll pull up a screen right now. They're pretty liquid. There are different rules. Okay, there are different rules as pattern day trading, which we have to deal with, things like that, because on the equity side, those rules are governed by the SEC. On the futures side, they're governed by FINRA, which is the financial, what is it, Dan? Financial institution, whatever it is.
Yeah, there's so many of them.
Exactly, but
I'm familiar with the NFA and the CFTC, so they're in there as well.
Yeah, but I'm going to pull up for you guys right now. It's just populating. So here, even on Thinkorswim, guys, what I put in here was the symbol for the ES. So it's backslash ES. Okay. And you can see all of the there's daily expirations now. And so let's see what for, here we go. Let's get somewhere close to at the money. The futures are trading 64.60-ish right now. So if we look at, the volumes here and open interest, usually pretty liquid. Now, I will tell you, for options on futures, the further you go out in time, even a week can make a big difference, that the volume and open interest really declines considerably. But the markets are typically still really, really tight, very liquid, great product to sell. So we were talking about the micros, which is a fantastic product. I think CME came out with micros a couple years ago just in these in the ES and in the NASDAQ, and now they've actually expanded that to many other products, including in the crypto space with Bitcoin and Ether. But if you look at an ES or an NQ futures product, okay, you'll see that the micros are 1/10 the size. Okay, same on the option side. Okay, so it makes it much easier, especially like Dan was saying, for someone maybe newer to futures, someone that wants to have maybe a little bit more control. Micros are unbelievable products. Before we go on, told you I was going to get Kobe into the picture today, who caused the black eye, but I figured we'd get all three of them in there. So today's word of the day for the wheel is puppies. All right. There's no, right. And while you're doing that, Kevin, there's no early assignment. There's no early assignment on futures options. They are cash settled. Yeah, there is no exercise and assignment risk. Those are my three pups right out my right out my back door. Oh, big news hitting the tape. Travis Kelce and Taylor Swift are engaged. Woo, biggest news of the century there. Woohoo! Oh, who cares? Anyway. Okay, so we were talking about, the next coming up with NVIDIA and then PCE, and then we have the holiday weekend, and then the market should start getting more volatile. And besides everything else on our plate, okay, this is really important. This hasn't made a ton of headlines yet. It will, I guarantee you, starting next week after the Labor Day holiday. Okay? The government's fiscal year ends September 30th. We know there's always issues with budget balance, the trade imbalance, the budget deficit. And boy, you have got to start preparing for this, whether it's on the equity side or the futures side. And I'm telling you, the stocks, ETFs, and the futures markets, they are going to be ramping up. So if you want to learn more about trading futures, guys, and again, it's the barrier to entry is very minimal. The margins are really small. The liquidity is great. Dan is hosting a webinar tonight. Okay. And these are some of the things that he is going to be talking about. Dan, you want to give him a little preview here?
Sure. Well, I'll be talking about volume again, and I'm sure I'll bring up Well, I guess it depends on how it goes, but like
Yeah.
things that would make the market explode a little bit more, the things you mentioned, like Nvidia, and how that can benefit a futures trader. Even though we don't trade Nvidia, it will dramatically affect how the futures work. Especially since I just looked it up earlier this morning that it's now 14 or 14.1%,
Percent. Yep. Huge.
14.42% of the weighting,
Crazy.
and it overtook Microsoft, which is now 12.2. By the way, the top seven, I added them up. They are now, since Broadcom is in there, they're now 50.6,
Crazy.
50.6% of the entire weighting of the NASDAQ. So when one of the big boys moves, we need to, be ready for that. And we'll talk about things like that. But really, I'm going to show how my trading program, I'm going to explain the three different algorithms that I designed with a team of engineers and mathematicians, and how the three of them line up for a trade that we take. So we try and be very rules based, not try, we are very rules based. And I'll be going over that with some examples. So it should be good for anyone who's interested in trading futures.
Absolutely. And it's, this is for beginners. This is for people that have been trading futures for a while. So I highly encourage you to, I put the link in the chat there. Highly encourage you to sign up, log in tonight. Doesn't cost you anything, and listen to what Dan has to say, especially on the automation side of things and what Dan has done and created to not 100%, but almost 100% automate trades. There is still some human interaction, right, Dan?
Right, right. So yeah, black boxes are, they're there's always going to be a time where a black box gets caught in a loop of garbage, no, just too much noise. We're trying to find the signal in the noise, and that means that the humans have to be a little bit involved. But once we ask the program to look for a trend or look for a reversal, then it takes over from there. Right? I mean, that's it. You click a button and then it will look for the trade. If everything lines up, places the orders for you, trails the stops for you, etc. And then once the trade is over, it goes into a holding period. Like you park your car, you put it in park, you can't go anywhere from there. And therefore, you can't get into an accident. Same with the trading. Once the trade is over, it's in park. And then the human has to say, okay, thanks for that. It was a good trade, and the market just slowed down dramatically, or it's the end of the day, whatever the case may be, and you wait until things line up again, which is, and that's all about the training there and being in the live trading room about how to spot these things, which is quite frankly it's pretty easy, but the
For sure.
executing it is where the automation comes, and you got to be quick for that, and that's why we use the automated program.
Awesome. So hopefully you guys will all join Dan tonight. Told you yesterday we were going to change up the wheel a little bit. This will just be for today. So special for today up there. Hopefully this thing is getting better, but that's the fight I lost with Kobe. So let's get rolling on the wheel here. Oh man, that's dizzy looking at me spinning around there. Holy cats. Edward, Frank, who do we have today? Edward Contreras. Edward Contreras, are you in the house? Seriously, right, Kevin? Edward Contreras, are you still in the house? You got to be in it to win it. Let us know, please. Todd, nice emoji. I like it. Come on, Edward. Don't make us spin this thing again. I got too dizzy the first time looking at it. Uh-oh. All right, Edward. Oh, Edward Freedom. Yes, you were very close. Oh, there he is. Made it. Edward is here. Wonderful. Wonderful, wonderful. Okay, Edward, shoot me an email. We're going to post it up here right now. prosperswag@prospertrading.com. There it is right there. We will get you out some swag. All right, everybody. Again, hopefully, for those of you that especially really are just on the option side, on the equity side of things, stocks, options, we want to give you an introduction to futures because it is an incredibly deep liquid market. unbelievable opportunities. And Dan is the man. Dan is the guy to learn from. Dan, thank you so much. Of course, appreciate your time. We will
Thanks for having me.
see.
I hope to see
Absolutely.
everyone tonight.
Yes, we will see you tonight. And everybody, we will see you back here on Market Minds tomorrow. Have a great night.